Get my dollar trade playbook to learn how to position, profit, and protect during a dollar devaluation. Scan this QR code or click on the link in the description.
The market's kind of grappling with what does that look like? What can we expect out there? But at the very least, the market knows semiconductors, maybe it's Nvidia, maybe it's somebody else. I mean, it's probably Nvidia, primarily AVGO, AMD, et cetera. They are going to build all this. There's no way around it. I mean, you can tell me that valuations are too high, and certainly they can reset lower, but no one can tell me that this story isn't in fairly early innings. Data centers, the equipment that's required, the companies that are going to crunch the data, it is happening.
This is your bet. But in order to believe that, I'm going to, because this is what I do, I find the argument, and you have to hear it.
I don't want to hear it.
And then
I'm
you can
close my ears
dismiss
right
it at your will. Of course, we are free will, and it's a two-way market. But in order to buy that argument, and I'm not talking about Google and Meta screaming higher into all-time highs because of their dominance and huge moat and safety. There's no way to explain current S&P 500 levels without using at least a peak confidence PE ratio of 22 times and applying current consensus earnings estimates or super peak PEs of 24 times. This is from LaDuc. So this is what we're talking about right here. So basically the last time the S&P traded 22 times, by the way, was in 2021, right before a quite large 2022 pullback, 35% in NASDAQ, 65% in Nvidia, etc. Bitcoin too was trading 16,000. So at the lows before central bank intervention came in. So you know me, I'm very focused on macro policy intervention and macro event risk. And right now, this is just a fundamental review of where we are. For you to maintain your bullish bent, you have to believe that since the last time the S&P traded 24 times earnings was at the peak of the late 1990s dot-com bubble. It's our only comparison. It really is.
It is, yeah. And I don't disagree, Samantha. That's why I said, well, I don't know. Maybe Nvidia is only worth $80 in a different kind of valuation type market. But I'm just saying the stories are so strong. And I don't know, that's not necessarily helpful, but at least in the back of my mind, I have to think, well, okay, markets are story driven much of the time, but you're right.
Portfolio managers are multiples driven. And so this is the story that they have to tell themselves. This is all LaDuc. They do great research. To believe the S&P has any upside from here, one must be confident that multiples can either hold super peak levels and index earnings will be at least $302 a share, or that we can see fresh highs or PE multiples 26 times, and future earnings are all but assured to grow 3 to 14%. So that's kind of the money quote. The money quote is that you have to be assured to grow your market that you're very bullish about is going to go from 22 to 24 to 26.
Yeah, you can't falter.
It cannot falter. And we had the same kind of vibe at the beginning of the year when I showed this chart. Remember this in December, January? We were having these talks and I said, nobody's pricing in recession risk, which would bring down these multiples X amount. And then of course, the market rolled over February into April, and then policy intervention came back in, and we still have policy intervention, by the way. So I have been noting some policy intervention by Bank of Japan that just came in of late. So anyway, well, that's relegated for clients. But the point is, we have some shake and bake right now because of the Powell pushback. We do have intervention and the Trump put and tons of liquidity. And folks like you who are all bowled up because of these multiples on an AI infrastructure build out and productivity. It's somewhere in the middle. In my opinion, the truth is somewhere in the middle. We don't know yet. But yeah, long story short, we're talking macro and themes, which right now Google and Microsoft are just going haywire, and the universe of stocks that support that one theme are doing really well, but the rest is not so much. It's kind of like the top line 3% GDP growth, but in reality, personal consumption is only 1.4%. So you just got to kind of balance that with Main Street versus Wall Street, if you would, please.
I think you're right. And like I said, yesterday I started selling quite a few things. I've been hedging some things. I've been hedging out my hood, a few other things. So I am a trader. I'm a trader at heart, but I try to be a little bit more long-term oriented for some of the larger ideas, which tends to be more my style these days versus doing 200 trades every day when I was a market maker. So it's a little easier to sleep at night without that kind of action. But I mean, look, there's an interesting chart that I saw. So right here, no spillover from the meme craze this time. So here's percentage of top 100 stocks with inverted call skew. So that's basically like excitable stocks. When we see those parabolas, usually that shows up in upside call skew. Everyone's clamoring to cover short positions, maybe to get excited to play the upside. And so if you look versus back in 2021, we saw that it spilled over into kind of everywhere. So the top 100 stocks, we got up to, what is that, 30 to 35% with this inverted call skew. So exhibiting that kind of extreme behavior. And I've been showing people the ARKK versus the big cap stocks. That's kind of one of my indicators, which is just sitting on its trend line right now. It's got to kind of hold, or we may have a little sort of summer pause, which I have been telling people over the last few days, been saying maybe we get that summer pause and then we get this really kind of stupid melt up in the fall. But in the meantime, this, you could look at this and say, well, okay, this really is, to your point, Samantha, it's been very kind of concentrated in some stupid areas, and even not so, I'm not saying Microsoft's stupid, but it just went up like 70% in a straight line. So that's a gigantic company. So it's in a few little meme stocks, it's in a few bigger cap stocks, but it hasn't yet spilled into that mania that you sometimes see. And I wish this went back to the .com in those times, because I don't expect it to be too much different than 2021, because it was a mania that just seeped into literally everything. And that's a true mania. Right now, believe it or not, it's almost a little kind of localized a little bit. I thought that was kind of interesting.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.